Hey Rob, this other lender just quoted me a better rate. Can you beat it? Look, I've been a mortgage professional for nearly 20 years, and during that time, I've had to contend with a lot of rate shoppers. And as much as I'd like to admit otherwise, none of us in this industry win them all. But you may be surprised that both consumers and lenders share a common goal if they don't wish to be defeated in the price war. And it's an understanding of how mortgage rates are negotiated. If you're in the market to get a home loan and you want to set yourself up for the best chance of success in getting the lowest rates, let's learn how to rock rate shopping for a mortgage starting right now. Hey guys, welcome to Rockin' Real Estate. I'm Rob Spinosa with Guaranteed Rate. If you're a home buyer, a homeowner, or even a real estate professional looking for home finance tips, tricks, and the occasional cool guitar licks, I've got your Backstage pass to a better understanding of the mortgage business. The first thing to understand about shopping for a home loan is the product you're looking to buy, money, is highly regulated. That means that your mortgage originator, who might be a banker, a broker, or a lender, will be held to certain compliance requirements that will govern what he or she can and cannot offer. So even though many of us in the industry would love to match or beat our competitors' quote if it were solely up to us, mortgage consumers need to understand that on many occasions, it's just not in our control. Before we get into actual rate quotes, know that there are only two ways that your mortgage originator can be compensated, either on the borrower paid model or on the lender paid model. These days, and for most conventional loans, the majority of loan originators will be paid on the lender paid model. That means that your loan advisor's compensation is paid from his employer or broker to him. You, as the consumer, do not pay your lender directly like you would in the borrower paid model. However, there is no circumstance where your originator can be paid by both the borrower and the lender. Oh, and just because you're paying points when you get a loan, you could still be on the lender paid model. Discount points, as they are technically called, must be used to reduce your rate and not be used to compensate your lender. Lenders, brokers, and banks must have a set compensation level that only varies based on the loan size. It cannot vary based on the application, the property, the credit score, etc. Note that I didn't say that your rate won't be impacted by these variables, but the lender's compensation cannot vary client to client or scenario to scenario. For instance, let's say a lender's compensation is set at 1% of the loan amount. If client A has a purchase loan, a 680 FICO score, is buying in California and using a $500,000 loan, the lender's compensation would be $5,000. If client B has a cash out refinance, a 770 FICO score, a duplex in Washington state that requires a $750,000 loan, the compensation on that transaction would be $7,500. Of course, the rates on those two scenarios could be wildly different. But the constant was that the lender couldn't charge 1% on the simple transaction and 2% on the more complex transaction. This is known as the anti-steering provision, and it's built in to protect the consumer. Lenders cannot charge more to the unsuspecting or unsophisticated borrower and charge less to a close friend, for example. When it comes to compensation levels, which in turn drive the rates available to consumers, one size fits all. So how do these facts translate to the shopping process, and what can the consumer do to set themselves up for the best possibility of getting the lowest rates? I would suggest three things. Number one, get formally pre-approved. A lender or a broker cannot get you an accurate quote without first understanding the specifics of your application. Sure, there's a commitment on your part when you do this, but it's an investment in assuring that you get accurate data. If you desire, you can even apply at more than one institution. But understand that this can be difficult to manage for some. We'll only see about 25% of our clients take this step and then successfully manage the additional stress it creates. The balance of our customers will just use the information that we provide and then use this information to query any other lender they're considering. Two, keep your finger on the pulse of the broader financial markets. Yes, online tools can be helpful with accessing rate quotes, but they're much more reliable and effective when combined with your pre-approved quote. And when you do any rate comparisons, be sure to do them on the same day and ideally at about the same time, as rates can and do change frequently. Number three, compare all lending sources at 0 discount points if possible. Too much data and too many variables make it harder to know which deal is best for you. I advise all my clients to keep it simple. Take the program that you prefer most, let's say a 30-year fixed, and have every lending source quote you on just that program at 0 points to start. Once they're all on the same page, you can request additional features, like paying discount points to buy the rate down further, or requesting a lender credit that will lower your closing costs. Look, I understand that there are two universal truths held by every rate shopper. They are all looking for the lowest rates, and they're all looking for the lowest costs. While no single lender can be all things to all borrowers, if you're methodical about your search for the best home loan terms, and you follow the instructions we've covered here, your chances of faring better are going to increase dramatically, and your ability to reduce the stress of the rate shopping process is going to decrease, something I know most of our clients would welcome. As someone who's been on the lender side of thousands of transactions, I'm confident in giving you this consumer-facing advice. So if you should have any questions about any aspect of the mortgage process that will get you the financing you need, don't hesitate to get in touch at any of the links below or by calling us directly at 415-367-5959. And if you found today's video helpful, click on the like and subscribe buttons and we'll keep the hits coming.